Hi everyone, and welcome to our demo, Amicus and ICAS. I just would like to check that everybody can hear me. So could somebody very kindly stick a Y in the chat box, just to let me know you can hear me and that you can see the slides. Thank you, A4 South, Fiona Hutchison, Keith, thank you very much. Great. Okay, so I'm going to just run through real quick a couple of housekeeping points just before we get started. So everybody is on mute by default, but we've got the little chat box that some people are kindly already using, so use that if you want to ask any questions throughout. We're working to a 1 hour webinar today. There is going to be a Q&A session that will be happening around about 1/2 past the hour. After Q&A, there's an optional product demo. You don't have to remain online for that. We hope that you would like to, but there's going to be details if you'd like to get in touch, and we can do a one-to-one demo with yourself and your colleagues thereafter. So for the Q&A, like I say, around about 1/2 past the hour, any questions you've got, please do pop them into the chat and we'll get to them then. There will also be a recording. We're recording today, and that's going to be sent out to everybody who registers. We'll send that out next week. So without further ado, my name is Mel. I'm Head of Growth at Amicus. I'm going to be taking you through some of the content today. I'll be talking about the technology compliance side of things. And today I'm really delighted that I'm joined by David Mingus from ICAS, and he'll be talking about all things AML as well. So we're going to get started. You're going to hear from David first of all. We'll pass back to me, back to David. We'll have our Q&A, and then my colleague Natalie will be taking us through that demo at the end. So over to David.
Thanks very much, Mel. So in this first section, what I'm going to look at is the current landscape surrounding AML in practice, why AML should be considered more than just a compliance task, and why at ICAS we really want to support firms with their AML compliance. And then I guess just finally, we'll have a quick look at why ICAS has entered into the strategic partnership with Amicus going forward. So hopefully on the screen at the moment, you can see the anti-money laundering annual report that ICAS have produced in 2018. So this is a report which, or one of a number of reports which ICAS prepares each year. So we cover reports on practice monitoring, audit monitoring, insolvency monitoring, and obviously AML monitoring reports as well. And the purpose of this is really, I guess, to help our members understand where or what our monitors have come across within the last year, the key findings, the key facts that they've come across. And we decided in 2017, although while AML comes as part of practice monitoring, we decided to separate out AML into a separate report in 2017 for the first time. And that was done really to emphasize, first of all, the importance of AML, but also to reflect that ICAS would become an AML supervisory body under the 2017 regulations. The report covering the 2018 AML reporting period has just been published on icas.com and will be available for you via links that we send to you as well. So in this report, it's reported that 97% of firms were assessed as either compliant or generally compliant, which, although that sounds really good, unfortunately, the number of firms who are fully compliant tends to show a downward trend over the last few years. So we've moved from a position where nearly 3/4 of firms were regarded as being AML compliant in 2015 and 2016, to only 57% of firms being compliant in 2018. With the new AML oversight body, OPAS, expecting a robust approach to be taken to regulation, any firms that are now assessed as non-compliant or generally non-compliant will receive a follow-up monitoring visit. Approximately 43% of firms reviewed in 2018 are subject to follow-up checks. So you can hopefully see that there are a significant number of firms who are falling below an acceptable standard when it comes to AML compliance. So however, it's not just the regulatory aspects of AML that gives us cause for concern. The UK government is working not only with the accountancy sector, but also with the legal and property sectors to promote best practice in AML compliance and the reporting of suspicious activities. This has been carried out through the Flag It Up campaign. In a poll undertaken by independent researchers in January of this year for the Flag It Up campaign, 95% of accountants indicated that they were concerned about the possibility of being involved in money laundering unwittingly or being exploited by criminals. Over 3/4 of accountants interviewed had, within the previous 12 months, had cause for concern or suspicion about a client or a prospective client in AML activities. This is also reflected very much in the latest ICAS practice survey, which we carried out in association with Practice Engine, and which the results of which were published in the May edition of the CA Mag. This also found that a significant number of practices had disengaged from clients or declined to act for new clients for ethical reasons, and a significant proportion of those would have been in relation to AML. So it's quite clear that beyond the regulatory concerns, reputational issues are very much associated with AML activity and high on the practice's risk management mitigation. So while we've discussed some of the regulatory and reputational challenges which partly explain why ICAS wishes to further support members in practice with AML, there are, of course, very many more reasons for that. Many of the challenges which I'm sure you're facing in practice have their root in manual systems involving paperwork, numerous touch points in a process, and are seen to add little or no value. The use of technology can, however, remove many of those issues, reduce the burden, and add value. So when I and my colleagues go out visiting practices, there are a number of key themes which crop up regularly in our discussions. The first of those is that practitioners, and particularly small practitioners, which account for approximately 70% of the ICAS practice community, you report that you're drowning in paperwork and overburdened by regulatory conditions. We also find that GDPR issues came hot on the heels of the 2017 AML regulations, and this refocused a lot of minds on privacy and security of personal data, not to mention the new special provisions for biometric data, which would include copies of passports. There's also a real desire to reduce risk and make sure that things don't go wrong. Not only does getting things wrong attract the attention of monitors and result in follow-up visits, but in the extreme, the criminal liabilities and reputational risk of getting unwittingly tangled up as an enabler for money laundering means risk mitigation must be a significant priority for anyone in practice. Another area that we're often asked about is, what does ICAS do for me? How can ICAS support me better or give me more guidance? So while there are a huge amount of resources which ICAS have made available to practices, and that includes free access for ICAS firms to the General Practice Procedures Manual, which includes guidance and templates and checklists, or includes the AML news page on icas.com, or through other communications such as regular articles in CA Practice or the Technical Bulletin, this still leaves a significant amount of work to be done within practices to disseminate all that information and get all those resources and put it into practice. We also realise that the main purpose of a practice is to serve the client. So time must be spent on the core activities of the firm. So while we're never going to get rid of regulation or compliance, we want practices to spend more and more time on what makes them grow and prosper, and for accountants to contribute to the success and growth of their clients. Finally, as a developmental regulator, it's not always about the big stick. In fact, we would much rather put more resources into upfront support and assistance to avoid issues in the first place. A profession that's littered with disciplinary issues doesn't build trust, and perhaps that has been seen very much of late in the audit market. So by focusing on increased quality, making things as efficient as possible, we can all help to improve client take-on, reduce costs, and make our business more profitable. So just before I hand back to Mel, I just wanted to briefly touch on why ICAS has entered into the strategic partnership with Amicus. It's hopefully clear from what I've said already that within practice support team at ICAS, we have a real desire to work with practices to reduce the pain points, make practices more efficient, drive up the quality in regulatory areas where necessary. So when we were looking at how we could perhaps best address increasing complexities around AML compliance, we wanted to try and find a solution that would make a real and tangible difference to everyone in practice. As I've already mentioned, technology can remove many of those issues, reduce the burden, or add value. And I'm sure many of you participating in this webinar have already considered or are looking at or already have implemented in some ways electronic AML ID systems. However, when I was starting to look at what we could do, many of the service offerings that we were looking at, it was evident that particularly for small practices, the pricing structures were built to deliver for significant volumes of ID checks being carried out, with fixed monthly license fees on top of the ID check costs. Many of the service providers also had significant minimum contract periods tying you into a service for a long time. So unless a practice is taking on a significant number of new clients on a monthly basis, that model just simply does not deliver economically for the vast majority of our ICAS firms. In addition, a lot of the AML ID check services were just that. They would verify the data against a large database. However, as I'll cover later on as part of a brief reminder of the regulatory requirements, the ID verification is only one small part of the required process. So we were introduced to Amicus quite a few years ago now, and as a new technology startup based in Edinburgh, I would say that they have listened to what ICAS and what our members have said and how they've developed their product in the last few years. They've also been willing to very much incorporate risk assessment templates and provide a real solution to a problem. Make sure that everything's GDPR compliant and deals with risk assessment as part of the CDD and identity annual renewal review process. Most importantly, in our discussions with Amicus, they've been willing to provide a bespoke pricing model for ICAS, and that's on a pay-per-pay client basis without long-term contract tie-ins, providing a cost-effective solution for firms to deal with AML compliance. Ideally, actually, this should be a no-cost solution to you as a firm, because the cost of any AML check and client take-on should be getting disbursed back to clients as part of your service. So we've done that now, so I'll hand back to Mel now for the next part.
Thank you. So many points resonate that you were talking about there. That's a huge percentage of firms given cause for suspicion just in the last year, and it's something we see across different sectors. So as David mentioned, we're delighted to be working with ICAS in a more formal capacity as part of this strategic partnership that we have. We've worked together for many years and we're really dedicated to leading excellence within the sector, and we are all ears. We like to listen to our customers, ensure that the product that we are creating fits their needs, and of course working closely with regulatory bodies like ICAS. Really huge part of how we develop our product to make sure that we're abreast of regulatory change. So more on that later. What I wanted to start talking about today was the perception of risk in relation to AML. So when we talk about anti-money laundering on a global scale, and we talk about human trafficking and terrorist financing, we tend to think of high-risk countries, like some of the countries here, represented by the flags you see in front of you. But as I'm sure everybody online today is aware, it's a German bank who has been at the center of probably the world's largest money laundering case to date. And in fact, just a few weeks ago, Deutsche Bank not having an easy time of it just now. Just a few weeks ago, it was uncovered that there has been a technical glitch in some of their monitoring and their alerts, and it's believed that that glitch has existed for two types of reporting for over a decade. And the point that I'm about to make ties in really nicely with David's point about let's put the work in up front and not after. There's a huge amount of effort now that's going into the cleanup. With Deutsche Bank all the time, the effort, new hires, rehauling systems, and I can't help but think if as much effort had been put into testing that system historically over that decade, those glitches might have been found earlier and saved a lot of pain and time thereafter. So it really is worth putting in the upfront effort, and it's also a worthy reminder to us that money laundering impacts everybody. It doesn't matter how gigantic your business is, it doesn't matter how small your business is, it's a real threat, regardless of size of business or transaction. And this is just a bit of a reminder, I suppose, of why none of us want to have laundered money flowing through our businesses. There's a real human cost to money laundering. It's linked to serious and organised crime, and we should all care about preventing it. But we also understand that with that comes a burden, usually an administrative burden. So, as we talked about earlier, there's admin, there's compliance that needs to be done. A lot of firms still doing that using a paper-based approach, and that takes a lot of time. And there's also a burden to understand what your clients, both new and existing, are up to, and also the burden as well to make sure that your internal systems are stress tested and are robust enough to deal with the compliance that you need to be doing on a daily basis. And we know that this takes a lot of time. So on average, this is not just specific to accountancy firms, this is an audit of professional services firms who complete AML compliance. But the point being, firms are spending almost a full working week each month on their AML compliance. It's a huge amount of time. And what tends to happen, what we tend to hear from customers is that as legislation changes, as regulations change, the AML compliance kind of procedures, if you like, within the firm, they get added on. So it's an add-on to the existing business as usual. And I talked about this yesterday, actually, on a free agent webinar, but I bet somebody else on this webinar has a cupboard of shame at home. I do. I open the door, I chuck another thing in, I shut the door, and I hope it doesn't all fall out. And it's kind of the same thing with compliance paperwork. It just gets bolted on, and it's good to step back and take a holistic look at that, technology being a huge part of that, obviously, to see where you can make efficiencies and make it a bit easier. And also thinking about what you could be doing with that time. If you weren't spending 4 days every month doing compliance paperwork, you could potentially be engaging in more meaningful time and conversations and interactions with your clients. So to reduce the 4 days every month, coming from Amicus, obviously I believe technology is a huge part of it. It's how our first product was born. So Amicus ID is our flagship product, and it's used for compliance, not surprisingly, anti-money laundering compliance, not just accountancy firms, used by legal firms, and more prevalent now in the lettings sector after the letting agent regulations of last year or year before, and also recruitment. So it's been really interesting for us to see the problems that are shared across different sectors. And even for us, as a small business, we have to do due diligence on our employees and on our clients, and it's really difficult for me to imagine asking our staff or our clients, or indeed our investors, to come down to our office in Leith with a copy of their documents and their passports so that we can photocopy them and scan them. And that's the very reason that we created the product in the first place and why it exists. So the whole idea around helping you to know your client more, better, and helping to protect your business from risk as well. And we also, so we've talked about the impact, the wider worldly impact of money laundering. We've talked about how it is an administrative burden, it takes a long time, but we also know that firms find it difficult, so challenging. This is the most recent practice survey from ICAS. We can see here that compliance and regulation is cited as the largest challenge facing firms. And we'd really love to be part of the solution to turn that around and see that decrease and see it not be such a challenge. And that's a part of the partnership that we have with ICAS, is to help firms understand what their obligations are from a regulatory point of view, but also to hopefully use our technology to take the pain and the burden out of it as well, and free up the time that we talked about earlier. But just to be clear, I'm not suggesting that technology is the silver bullet. It isn't. It needs to be a combination of technology plus behavior. So thinking about instilling a culture of awareness and reporting within your firm. And as the Money Laundering Regs 2017 ask, and well, they don't ask, they stipulate, I suppose, that you need to have training in place for your staff and that you need to have robust processes and procedures in place to make sure that your money laundering compliance adheres to what the regulations require. So absolutely not just down to technology, it's technology plus human behaviour to simplify that compliance journey. But also what we look upon the legislative landscape as is an opportunity. So it's an opportunity for us to make sure that we're upholding the best standards whenever we do business, and we are adding value ultimately to our brand by holding ourselves to really high ethical standards, and also thinking about how digital plays a part in improving the experience for your customer. And I'll talk about that a little bit more detail in 2 slides time. So on the regulatory point, the Money Laundering Regulations 2017, not so new now. Few key points that came out of that, and the ones that I'm going to pull out today are around enhanced due diligence, PEPs and sanctions, and also the need to recheck regularly, which I think David comes on to talk about a little bit later. But the 2017 regs increased the focus hugely on monitoring clients, and by definition of what the regs state, it is for the duration of the business relationship. But there's also more of a focus now on politically exposed persons, which was extended to include local PEPs, but also to stipulate what the enhanced due diligence process is that needs to now be put in place if you are working with a politically exposed person. And also just around, like I mentioned earlier, the processes and the procedures for AML compliance. So there's need for in-depth identity verification, which leads me on to my point about the 5th Money Laundering Directive. So that's almost on our doorstep. EU member states are required to implement that. Get my words muddled. I think it's the 20th of January next year, so it's imminent. It's coming. It's soon. And there's lots. It's not a huge update. It's not as big as the jump from 3 to 4. It's meant to be a bit of an update, if you like, to 4. And there's a few reasons for that. So some of that is around terrorist financing and some of the attacks that we saw in Paris and Brussels at the end of 2015, early 2016, and of course the Panama Papers leaks that happened early 2016, but also the EU's intention to align with the Financial Action Task Force on what their AML recommendations are. But from a technology and compliance point of view, one of the standouts for us and our product is that the 5th Money Laundering Directive mandates the use of electronic means of identity verification. So we've talked about it before, but it's now becoming a regulatory requirement that you shift where possible your compliance procedures to be online and digital versus the old paper-based method of calling folk into your office to copy the documents and the passport, like I was talking about before. So I think in the future we could do a whole webinar on the 5th Money Laundering Directive. There's a lot of detail in that, but that's just a few of the call-outs for us so far. And in fact, on that point, about not calling people into the office with their passports and their documents, that's exactly kind of at the heart of why we've designed Amicus ID to be the way it is. So the point here is around the brands that your customers will also use. So like Monzo, like Money Dashboard, they're just a few examples. But the point around these is that these days we can go online and we can open a bank account within a few minutes. We don't need to speak to anybody. It's all handled online. It's a seamless end-to-end experience with less faff or no faff. And this is the world that our customers live in, and they will now come to expect this whenever they engage with a professional advisor. So the face and the experience of professional services is changing. And that's why we built our product to be the way it is. So I'm not going to go into loads of detail on this because we're going to have, like I mentioned earlier, the optional product demo pretty soon. But the whole idea being from Amicus ID, you as the accountancy firm log in, send all the requests to your client over email, they log into a portal, complete the request, and then the information is back with you. So there's no need for anybody to meet face-to-face to get through that customer due diligence. And that's pretty much me. I'm going to stop talking now and pass back to David. And then we're going to have Q&A pretty soon. And roughly in 10 minutes, we're going to be coming along to the product demo. So I'll be back with you then. Oh, sorry, I went on.
Thanks very much, Mel.
Thanks.
Slight preview there, slides coming up there, but never mind. So I guess while we're taking a look at the regulatory requirements, we really don't have time within this webinar to go through the regulatory requirements in any great detail. So this is just very much a brief overview of some of the key building blocks of systems and processes which you should have in place within the firm. There is quite a lot of guidance around, and the main one, obviously, for the accountancy sector is the CCAB anti-money laundering guidance, which was approved by HM Treasury in March 2018. And this can be found on icas.com by searching for AML News, and then onto the relevant news alert dated the 13th of March 2018. So if you've not already looked at it, I would suggest immediately after this webinar you head on to icas.com and get that, because that's the one document that our monitoring team will really rely on and look for you to have used as part of your guidance in setting up your systems. It's also just perhaps worth mentioning at this point that there is a forthcoming appendix to that guidance covering tax advisors, which is currently with HM Treasury for approval just now. And there's also one coming up for insolvency practitioners, which we expect will be sent to HM Treasury for approval within the next few weeks. So I think, as we've already said, technology can't completely alleviate all the issues, but can certainly help reduce some of the burden here as well. So one of the key requirements within the AML guidance under the CCAB is really for client due diligence, or CDD for short, to be carried out before a business relationship is established. And the CCAB guidance sets out 3 stages of that CDD. So the first stage is really identification, or gathering information on the client. Sometimes, I guess, also known as KYC, know your client, know your customer. Lots of acronyms around for those sorts of things. So that's the in-gathering of the basic information in the first place. The second and probably key aspect that came in as part of the 2017 regulations was a bit more formalisation, I guess, of the risk assessment, and breaking that down into 5 different risk areas that need to be assessed. And what you're really doing there, I guess, is assessing the risk of the client being involved in money laundering or terrorist financing activities. And the final stage is verification. So that's gathering the evidence to confirm that the information that you have, that the identity that you have is for the right person. And as Mel mentioned earlier on there, the monitoring really should be, or has to be, carried out throughout the whole of the business relationship. And the CCAB guidance talks about that being two areas. First of all, event-driven reviews. So that's where something happens that would necessitate a review. So that might be a new assignment, providing a new type of service to the client, or obviously change in ownerships of businesses, companies, etc. Those are fairly clearly identifiable events which should cause you to reassess your relationship and the risk that's associated with that in terms of AML activity. And the other part is routine periodic reviews, and the guidance really talks about that being carried out on an annual basis. So there should be an annual review of risk and identity checks where appropriate as part of that basis. So I think it's fair to say that it could be summarised as the requirements are a continual cycle. It's not a one-off exercise when the client is taken on. There needs to be information gathered about the client at the outset, but that also needs to be carried out on a continual basis. As part of carrying out the risk assessment, first of all, clearly you need to document that assessment and conclude on the level of risk and the impact that that's going to have on your verification process. And then obviously the identity confirmation part of it as well, where typically, I guess, you would look at photo IDs, passports, etc. as well as any PEP or adverse media checks, which might be appropriate depending upon the level of the risk assessment that you've carried out. And clearly, all of those elements need to be kept under review, but actually carried out at least annually in any case. So with the increased complexity of compliance, the frequency of compliance increasing, and the cost and higher risks associated with manual systems, to me, I think transitioning to a technology-based compliance systems really brings a significant advantage to anyone in practice. So that covers most of those sessions there. I think we have some questions in, Mel, have we?
We do. It's Q&A time now. So I'm just going to ask if anybody does have any questions, pop them in the chat. If anybody's leaving us maybe now before the Q&A or after the Q&A, there's a couple of points that we mentioned earlier. So we've got, for Amicus ID, we have ICAS specific pricing. If you want to have a look at that, that's the URL you should go to, just a page on the Amicus site. Also, when you get to that page, you'll see there's also an option to book a demo. So my lovely colleague Natalie, who'll be taking us through a demo just in a few minutes, that will be quite top level just for the purposes of today. But if you want to book in a one-to-one demo, then by all means, pop onto that page there, book a wee appointment, and we will do that with you. So I'm just going to have a look and see if we've got any questions coming in here. Yes, we do. So our first question is, what's the difference between compliant and fully compliant? If you have a 1% deficiency, for example, does that make you non-compliant?
Okay, so that's, I guess, referring back to our monitoring report and our classifications. So when our monitors go out and carry out the AML reviews, they will assess the process. And again, the monitoring report that's on the ICAS website covers this in a bit more detail, but something like somebody who's compliant, they may well perhaps not document something just quite as fully as they could do. So an example of that might well be actually they've carried out the risk assessment, but they might not, for instance, conclude as part of that document that it's a simplified, a normal, or an enhanced procedure that should be used for the identity check. But as I say, there's a bit more information on that in the ICAS monitoring report, which gives some examples of what makes that difference.
Okay, that's really good. Good question, and really good to know the difference between the two. That makes complete sense. Let's have a look and see if we've got any other questions.
There's a question here, Mel, that talks about the 5th Money-Laundering Directive, and whether that is likely to apply post-Brexit.
The Brexit question that's on everybody's lips. So hopefully, yeah, well, we'll see what happens. But yeah, the 5th Money Laundering Directive is designed to be applicable to EU member states. So my understanding would be that as still being governed by OPBAS and still, I believe the UK's desire to still fall in line with what the Financial Action Task Force, or FATF, stipulate, then I would believe that AML Directive 5 will apply post-Brexit.
I think that certainly there has been a consultation issued by HM Treasury recently, and they are talking about effectively that the 5th AML Directive processes and procedures will come into UK law, irrespective of whether we're in or out of Europe at that point. Clearly, Europe will continue to be an important trading partner in any capacity going forward. So we need to ensure that from a worldwide point of view, we're satisfied that we're not entering into money laundering territory anymore.
Yeah. And uphold all the good work that everybody's been putting in over the last many years. Can't put a number on that. Okay, one last question before we go, and that's around about, this is specific to using Amicus ID, and it's around, the question was, what if my client is elderly and or not very tech savvy? So this actually comes up quite a lot. It's quite a common question that we hear. Firms maybe not so sure if their customers are going to be able to use the platform or be happy, they know what they're doing. So our reply to that would be, it's really easy. Even if you don't need to be really tech savvy. Amicus ID isn't a kind of downloadable platform. It just works on a web browser. So you would just open Google Chrome or Internet Explorer. It's really simple. You follow a link from an email that's sent to you. But if you did have a client who perhaps wasn't comfortable doing that, or maybe just weren't so confident, there's an in-person option. So when you complete a check, you either send it to your client via email, or you can complete it in person. So you can have your client come into the office and you could sit with them and just complete it together. So even for the non-tech savvy, there's a solution.